All right, good evening, everybody. Let's go ahead and get started. Let me know if you can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it's working. Hope everybody's having a fantastic evening so far. We had a fun trading day this morning, which we'll be able to recap, and we'll also do a lot of fun stuff here with the COT report tonight, which I'm really excited about. We don't talk about this as much during the banker's close strategy, but this is very much a part of how we get into trades with the COT report in the mornings, and also throughout the week through our swing trades and through our longer term trades as well. So it'll be good to kind of recap those kinds of things. It's good to see you tonight, Lee. Thanks for coming. Also, just want to give a shout out to everybody in the recording. Want to say hello to you and welcome you to the class. However you're watching this, you are so welcome here. So before we jump into the COT report, it's really important that I share a disclaimer. As always, I just need to remind you guys about the risks involved in the market. You can lose all or more than your initial investment if you're not careful. This is a margined market. It is also important to realize how many pips you're risking on each trade, how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. I still do that. I was even just on a walk just a few moments ago. I'm doing, I don't know if you're familiar with it, Lee, but there's FTMO challenges. I'm doing one right now. And you have to manage your risk. You have to know how big your lot size is going to be. And I was just on my walk, I was processing through my mind, how big am I going to invest, using, that money, in that account. And I was thinking about all those things. But it's really important to do that process in your head or on paper every single day. Okay. Well, awesome, guys. So, let's do this. Let's go over the COT report this week. What's a couple things I want to do. I want to show everybody, the COT report, make sure everybody has access to the COT report. We'll talk about it in general. I know, Lee, you know a lot about it, but definitely want to make sure everyone in the recording as well knows about the COT report and how it works in general. The other thing that I want to do after we kind of go over those things, I want to show kind of what we've done this week using the COT report. And then the last thing I want to do is show you how to take swing trade to long-term entry opportunities with the COT report, and how to get better entries, because I know that's been a big thing is, hey, when we're taking swing trades, you can have these big swings against you and big swings in your favor. So how do you manage that? And that's something I want to touch up on today. Let's jump to the COT report over here. So this is all it is. I mean, this is my journal of the COT report. I think I've shared this before. I had one of my clients called me one day and said, hey, Steve, I made an Excel macro so that we can import all the data from the CFTC.gov website directly into the Excel or into Google Sheets here. So every weekend, so Fridays after 4 p.m. Eastern, when the COT report is released, all I have to do is click this update button, and this will go out and grab that data from their website and put it right into the sheet. It's so nice, honestly. And the only data we're grabbing is just these two columns right here. We're grabbing the percent, this, and actually that's it. All we're grabbing is the number of, let's see, this is non-commercial traders. So these are big banks. That's the commercial or non-commercial side. So we're grabbing all the banks that are speculators, grabbing all their data on the long side and on the short side for each currency. So that's what we're grabbing each week. And then everything else here is just kind of a derivative of whatever is inputted here. So this column right here shows you the percent of all the positions outstanding, what percent is long. And then right here, it shows you, of all the positions, what percent is short. And again, for those that don't know, how do you get to the cftc.gov website? You just go to cftc.gov. Let me go to their homepage here. This is their homepage, just cftc.gov. You go to market data and economic analysis. You scroll down to commitment of traders, which is COT, right? Commitment of traders. Click on that. When on your own time, definitely read through everything that's on here. This is super good information. There's actually a lot of different COT reports. The one we use is this current traders in the financial futures report. You click on that long format, and it's this really boring report that comes up right here, and it will update the most recent report. The most recent report we have was pulled from October 4th, 2022, and today is October 12th. So it is over a week ago. Friday we'll get a new report. A lot of people ask me, hey, why would you use this if the data can be over a week old? Well, the banks don't really change their minds on their positions week to week. Usually it takes them, and you can watch them over several weeks, sometimes months, move in and out of their positions. What we're looking at is the dealer side, the dealer long and the dealer short. Everything else here you can disregard. The asset manager side, you can disregard. Leverage funds, you can disregard. These are all different types of traders. The traders who sit at terminals and actually take trades for the banks they work for with the intention of making profits, that's these guys, the dealers right here, okay? And so we want to trade with these guys as much as possible. And that's the data we're extracting. And you can just do a control F in here and just search, the euro, click enter. It'll take you straight to the euro. And you can see how many long positions and short positions there are. Obviously a lot more short positions on the euro held by these banks than the long side. And it's been that way for months now. And what's happened to the euro? Generally speaking, across most currencies that are tied to the euro, mostly a decline. Does that mean you can't have a day where the euro goes up a lot? Of course, you can have a big day where the euro goes up a ton. And that's why we want to talk about entries today with the COT report, how you can find better swing trades, because so often, you can take a swing trade and just sell at the very bottom of the market. And it's not necessarily the end of the world, but obviously we'd like to take a little bit of a better trade. You just might have to be a lot more patient as to when you get in on that trade going forward. But yeah, so this is the data. You can either come and get this on your own, or you can just follow the journal, right? And all the information you need is just right here, right? I'll put both in the chat box here. Here's the link to my Google Sheet. And then also here is the link to the cftc.gov website right there. Okay, take a drink here. All right. Yes, that is a great question, Lee. Wonder why there are zero shorts in the, yeah, it's part of it's because, and this happened over the last 2 weeks. It was extremely, basically there's an absolute, right now there's an absolute commitment to the long side on the franc right now. Nobody is speculating at the moment. I know that's crazy as it sounds. It happens every once in a while. I've seen this happen on a couple of other pairs as well. You just have to go back and look at these different dates. But crazy as it sounds, there have been several times where there's been an absolute commitment by these speculators. And right now they are just buying francs. And we'll look at the charts and see kind of why and where they've been doing that. But yeah, it's been kind of crazy. They've also got huge bets right now on things like the yen, they're buying yens. That was the opposite not long ago, where they were just shorting yens, and that kind of flipped over a few weeks. Also, the Kiwi is extremely bought right now. Aussie is also pretty bought. Pound, a lot of currencies are bought right now. Your big short right now, we're not following the dollar. I actually kind of regret that we put the dollar in here. The dollar is actually, it's not the data, the way we're exporting or importing this data is not the same as the rest of these other currency pairs, or currencies rather. And so I've actually learned that this is not necessarily going to be helpful. In fact, the dollar has been going up. It hasn't been going down over the last several months. So this is actually not a very helpful tool, the dollar. And it's the only currency, if you look at it, it's the only currency in the COT report that is imported in a very different way. It's not even in the same data set. Anyway, some other things are going on too with it too. But all these other currencies that you're looking at here, these are all imported the exact same way, and the dollar is different. So I just kind of ignore the dollar each week until I find a better way to get information on the dollar and what these dealers are doing. So right now, naturally, the best currency pair to be trading would be the euro franc short. Right, selling euros and buying francs would be the best currency to trade, both long-term and any short-term opportunities, which we did that just this morning. For the bankers close opportunity, we shorted the euro franc. It was a great trade. We'll recap that later, but we'll also look at the bigger chart as well, to see where it's been and also where it's going, with this huge bet by these banks right now. So that's what this is all for. There's a lot of information on here. I try to just highlight the stuff that's important, right? Like obviously if I highlight something in green, that's important. If I highlight something in red, that's also important. If it's not highlighted, you know, also good information, but it doesn't really tell you what to trade or how to trade. Over here on the right side, you'll see all the signals that I'm issuing. So these would be my top signals of the week, would be a euro franc short, euro kiwi short, euro yen short, and then obviously the euro franc short is just like, hey, if you didn't know that this was the best trade to take, here it is. It's right in front of you, right? That's the trade you really should be focusing on and looking for opportunities as much as you can. And it's been that way for several weeks now. That will change, as it always does. But you can have several months sometimes with the same currency prevailing every single week. And it'll just feel like it's always that way. But there will be something that changes in the market, and eventually a new currency or currency pair will change. But for now, let's take advantage of this while it's available. Well, let's do this. Okay, so that's what it is in a nutshell. You're just looking at what the speculators, specifically at the banks, are doing on a week-to-week basis. And I think it's really important, just as a reminder and a disclaimer, that this is very helpful to find swing trades and longer term opportunities. It can also be helpful on shorter term trades, but it should not be the main reason you take a short term trade. Just because the euro franc is a good short to take doesn't mean that every single day it's going to be that way and you should bet your farm on it, right? I'm going to show you some ways you can take better trades and make money, actually make money with it, but it's not something, again, just be responsible with it, because it's not something like where, oh my gosh, we're supposed to sell the euro franc, let's just sell everything. Not like that, right? So let's actually pull up, let's do this first. Let's talk about entries on the euro franc first, and then at the end we'll kind of recap how we've been using this in the banker's close like we did this morning. So let me pull up over here my charts, and let's go to the euro franc, right? And let's go to, say, like an hourly chart with 1,000 bars or something like that. Or 2,500 bars is what let me do 2,500 if it'll let me. Okay, that's about all it's going to give me. Yeah, so this goes about to the midway of August, and it's actually been quite choppy. It's been very much back and forth. I would say there's been more down days than up days. There's been, as you can see, let me delete this Bollinger Band because I'm not using the Bollinger Bands right now for this. Actually, I don't even use the RSI. Let's go ahead and delete the RSI. Not for what we're doing. Save that workspace. Okay. So yeah, it's been quite back and forth. In fact, you could probably, you could probably draw a line where the market is right now and say, yeah, it's pretty much where it started nearly 2 months ago. And it's just been back and forth, and that's okay. That's okay. That's not necessarily like, oh my gosh, I thought this thing was supposed to go down. Yes, it is. And you can actually see, like, how do I say this? Like, just because something is even up and you're supposed to be selling doesn't necessarily mean you can't make money on it. You can make money on something if you have a direction and a plan. And that's what I'm trying to help you know. Like, know this, the banks are not willing to send this higher. They're mostly willing to send this lower. And you'll also know, like, on the days where this thing goes up, it doesn't go up very far. This was an expansion. That's a very short period of time where that expansion took place. Same thing with this expansion. Every time this thing goes up, it does not stay up very long, right? Like this one took the longest. And, other than those 3 expansions, this thing's only been bearish. And that's why I'm saying, if you look for opportunities for sells, you're mostly going to make money on this, because when this thing expands, yes, it does have some pretty gnarly expansions to the upside, but it's very quick. And as soon as the banks see it expand, they are right on that and shorting that thing. And that's why I think we need to be there too, to take advantage of that. Okay. And you can look at some of the other pairs too. Like, look at what's another example? Euro Kiwi. Let's take a look at the Euro Kiwi and see where it's been relative to what we're looking at. Okay, this one's actually been up. So this one, maybe not as many opportunities. This one I would say is more of a, you're just building the position. So the banks are wanting to sell this, but they're just building their position. Like they could have, I'm not sure how long this has been a signal or one of the signals. But let's say they started here, they could be building this. And at some point in the next month or two, they're going to get their huge move lower. So this one's a little bit different. Not as good as, say, the Euro Franc. Obviously, a little different animal. Let's take a look. Was it the Euro Yen? Let me take a look at this. Yeah, that's another opportunity. Closer. Not as good, still not as good as the Euro Franc, but kind of a mix between the two. This was a pretty large expansion. It did have a gnarly pullback, another expansion, a little pullback. We're expanding again. You could look, like, for example, you could look at this and say, okay, hey, I know I want to short this. Do I have a pattern that makes sense for shorting? Well, you could say, well, back here, I don't know if this was a signal a month ago, but if it was, here you've got a head and shoulders pattern. This could be the type of thing that you look at and say, oh, hey, I can see the higher time frame is giving me a signal, and the COT report has a higher time frame. COT report is a higher time frame indicator, and so maybe this would be an opportunity to sell right there. You could look at this too. For me, I would look at this right now, since it is a sell signal. This is probably not a bad time to sell, honestly, because, like, hey, you're coming up against a pretty nice resistance right here. You can see right here, we're right up against it. And even if it did go higher, my guess is the banks would continue to sell. And there's a good spot right there. lot of resistance that if you sold at, I'm assuming you could probably make some good money on the other end of it. So yeah, that's all good. Well, let's go back to that Euro franc, because that is our big focus. And I was showing you guys these expansions on the Euro franc and how quick they were. Basically, the concept is, hey, the banks are pushing this down pretty quickly anytime they send it higher. And this one I know for a fact has been a signal for several months, versus the other ones I don't know about. I don't remember how long those ones have been around. So, you know, and they didn't look as good, you know, in terms of 2 months ago, whereas this one has been a signal for several months. And you can see the countless opportunities to sell and buy. I mean, you could technically buy here, but I personally would only be looking for opportunities to sell. This was a news event, this middle expansion right here, and look how quickly the banks were like, you know, we're just going to send this lower, which I think is really interesting. And then, yeah, conversely, let's just draw out the contractions. Most of these contractions happened over a longer period of time. Like this one took a while. In fact, technically it goes all the way up to here. This one goes out to here. This one is still ongoing. This one didn't last very long. But yeah, most of the chart in terms of the bearish push is most of the chart. Like most of this is a down market, even though there were some pretty good expansions to the upside. In terms of time, most of the time spent has been going down. I think that's an interesting observation to look at. And it makes sense because that's what the COT report's been saying. That's what the big banks have been saying for several months on this Euro franc. So how would you look for some other entries? You could probably come here on this Euro franc and say, okay, hey, you know, this was similar to the Euro yen. This was a signal a month or two ago. That's a good sell opportunity. You know, obviously that represents a sell. You could, let's see, what are some other things here you could look at? For example, this was an uptrend in the expansion. Whenever you see a market break a trend, tries to pull back up, that's called a first retracement trade to sell. You could sell there or sell somewhere up here. That would be a good initial signal to sell. You know, hey, I got a break in the trend on this longer time frame, and COT says to sell. This is probably going to be one of those trades that lasts a long time. And yes, the whole month of September, this thing was down pretty much from the onset of that break. So yeah, you could catch a trade that could last a whole month. Like from the break right here down to its lowest low, that's 347 pips. You're not going to get the full 347, but yeah, you could capture something in between for sure. All right, what are some other opportunities? Right now, I'd be just a little bit hesitant to sell, although it might be fine. Usually when I see these downward channels, I don't like to sell those. Although in my experience, here's what usually happens with these. I usually see them, you know, continue along. I might see them break lower and then break up ultimately. That's been my, like, they'll just do something like that. And the opposite is true on upward channels. Like if you get an upward channel, you'll get a break higher and then you break lower type of thing. And honestly, that's probably what's going to happen if you go back to that Euro Kiwi chart, the one that's been up for a while. This actually could be the next Euro franc if you think about it, because let's go back to that chart on the hourly. This was a channel. Look at this. This actually could be, you know, actually come to think of it, I know it's been ugly in terms of a short for a while, but look at this channel here. This happens all the time. I feel like you get a nice channel, and then you break above the channel, and then at some point it's going to break below it. Now, currently it wants to continue. I'm surprised, but it's been mostly sideways nonetheless. Like this, since that breakup has just been sideways. So I'm thinking that we're probably close to the top here. And since we're getting a signal to substantially sell this on the COT report, my guess is this is probably going to be one of the next biggest swing opportunities. But yes, how do I say this? So let's say you had this signal just even 3 weeks ago and you were shorting right here, you'd be a very frustrated trader, right? You would be, selling right here, not a good time. At the time it probably looked fine. You're like, oh yeah, look at this. We're at the top of the market, probably that's fine, but then it continues higher. You'd be down right now if you had shorted there 500 pips or so. Yeah, so you wouldn't be a very happy camper at all. And I think so a couple of thoughts on that. First of all, when you're doing a swing trade, especially on a high ATR pair like the Euro Kiwi, you really do have to plan for really big swing moves like that, like hundreds and hundreds of pips. You really do. Because on a trade like this, whenever I'm trading channels, I usually target the middle of the channel anyway, which would be back here. So maybe, the way I would look at this is if I had a small position short here and it was down 500 pips, you could probably continue to sell this. And then when it comes back down to here, you could flatten out, the bad trade at break even or close to it. And then the good trade would make your 500 on the other end. That's kind of how I would look at it, as long as the signal is still there. But so when you're trading on a long-term scale like that, where you're risking hundreds and hundreds of pips, what does your lot size look like? Probably a micro contract, right? Especially if you have a small account, definitely a micro contract. Okay. And it's not a bad thing. It's like, if you can't come to the morning classes and trade live, or if you can't trade at night when there's a little more volatility during the London session, if that's not a possibility for you, then yeah, something like this would be really the alternative. It'd be more like a side hustle instead of full time, and that's fine. But you would definitely have to, be content with making, hey, I just made, $100 on this trade. It took me a week or two. It took me 3 weeks, 4 weeks maybe, and I made a couple $100. You need to be content with that type of thing. Whereas like you come to the morning class like this morning, we want to make $100, $200, $300 in 1 hour. Something like that. Obviously that's the goal. We're taking much larger lot sizes, going from fewer and fewer pips, type of opportunity. So it's just you just kind of have to decide, like, how do I do this? And I think for me, like, I have several different funded accounts. Like I trade my own money. I trade the APRA funds money here. I'm funded with them. I'm doing an FTMO challenge, trying to get funded with those guys. I'm doing the 200K funded account with FTMO. And I use these different funded accounts for different strategies. So like I'll take, I have an account that's funded that's specifically for just these swing trades. Because for me, I need to compartmentalize some of these bigger moves, right? Like I need to be able to say, hey, this swing trade is not going to interrupt what I'm doing in the mornings or at night when I do the, the Tokyo close or, the Sydney close or something like that, or an overnight trade. Is a very different type of thing, and I have to be able to protect it. I don't want to click the close all trades button by accident on my morning trades when I had some swing trades active as well. So I don't want the equity of those swing trades to be confused with whether they're up or down. I don't want those to be confused with what I'm making in the mornings, if that makes sense. So that's why I have multiple accounts where I trade these different strategies. like I have with this FTMO account, hoping to make I'm hoping to turn that 200K account into my new I want that to become the account where I trade just the banker's close, because I feel like that's been very lucrative for us, and that would be my biggest account, would be 200K. And so I'd rather, trade that one there. And then some of the other funded accounts, both personal and with the apiary fund, probably used for different. I have another strategy that I trade as well, not COT report related. It's a daily momentum strategy that I trade on my own. That's through my own funded account, totally different thing. So anyway, I just share that because that will help in my time trading, especially these longer term strategies. You really do have to have kind of a place where you can just put those, because they can really get confused and jumbled up into what you're doing on a daily, on the daily. So anyway, that's good to remember and do. Let's see what I was going to say about this. Anyway, back to this one. I think this one's, here's what I would do if I were trading this one, which I probably will. This looks good. Now I think about it, since I have a signal here, if you see this guy, and it could happen even tonight because look how close we are. If you see this guy break through that trend line, bust through, maybe comes down to this support, you need to be thinking, oh my gosh, here it comes, right? Here comes that swing opportunity over the next month or so. I've got this COT report that indicates I need to be selling. And I finally just had a technical break. That's how I would look for opportunities that maybe the people on the 5-minute chart won't see, right? So pretty cool insight. And then you've got the COT report to confirm what you're doing. So that's what I would look for is, hey, I've got my structure drawn out. If we get a break in that structure and, especially if it tries to re-engage, if it tries to come up here, that's an even better entry right there. And then from there, it can just get clobbered and go down. So yeah, anyway, that's a good one. But yeah, let's go back to that euro franc because that's still the number one trade to take. And then I'll lastly go and check out what we did today and how we use the COT report. Because a lot of the trades we've been taking with the banker's close have been confirmed by the COT report. You'll notice a lot of times we're trying to find opportunities to short the euro. In fact, I don't think you can go back and look at all the recordings for the last several weeks. Never have we bought the euro. I don't think we've ever bought the euro, not once. And part of that's because the COT report is telling us not to buy euros right now. Okay, so here's this guy. So this guy had a great resistance that it was at a couple days ago or at the beginning of the month. Now we've already come down, so it's been coming down, and we are now at some pretty hefty support right here. So if it wanted to, I could totally see it try to break up from here. Doesn't necessarily have to, but this one I would be a little bit more concerned about entering versus I like that Euro Kiwi better. And they're both great in terms of the COT report, right? But if you saw this guy break below this support, maybe you should get in. Maybe you should get into a short at that point, but maybe not right now. So that's kind of how I would be using the COT report, is not necessarily just go ahead and just trade it because you're supposed to, but hey, know that that's your bias. After you know your bias, let's go and, over here, once we know the bias, let's go to the charts and actually take a position when there's a break in longer term structure, like a trend line, just basic things like a trend line break, a support break, a resistance break, something like that would be what you're looking for. All right. And then last thing I want to show you, I wanted to just show you some of the trades we've taken today and even this week. Here's that euro franc. This morning we traded this. Let me plot these trades out so you can see them. Yeah, here it is. So this morning, let's see, the trading day began right here yesterday, 12 a.m. That was the beginning of a new trading day. There was no news today on the euro franc. Now, I did mention this morning. There were a lot of news events. We had GDP news on the pound. We had an FOMC meeting with the dollar. Even though there was no news, every currency pair is affected by the news in one way or another. But some pairs are affected more than others are, but they're all affected, right? So this one, when the Jerome Powell got up and started speaking, that's what caused this gap and these wicks right here. But as you can see, those were really kind of underwhelming. Nothing really big happened to this pair because it's not related to those news events, right? So what I like to see and what you guys should be looking for when trading the banker's close is anything that's not related to any news in the last 12 hours or any news that's coming up in the next couple of hours. That's fair game to trade. And you want to find something that's kind of breaking out one way or the other. This one at the top of the hour obviously was breaking out. You can see the break to the top here. That shouldn't be happening, especially as you're coming to a close in London and there's no news. That's your signal to go ahead and start pounding this. And, you know, you're basically calling BS on something that shouldn't be there, right? And you're just bringing things back to reality. That's our job. And we'll make money in the process. But in terms of the COT report, this is the #1 trade to short in the COT report, right? And, you know, obviously, even if it wasn't the euro franc necessarily, euro, just anything euro short would be a good option. Anything buying francs, which when you're shorting this pair, you're buying francs, that's a great option, right? So, so I look for stuff like this. Had this pair been the opposite, let's say down here instead, could we have bought this? Sure. For a banker's close, sure, we could have bought it. But would I have looked a little bit harder for another opportunity? Yes. Yes, I would have been looking a little harder for something that had COT report confirmation before I would have traded and bought this down here. So a lot more excited to sell this because it hit all the notes in terms of the banker's close strategy. And then it also hit the notes on the COT report. And for me, that was enough to say like, wow, let's definitely take that trade today. So we had a fun little trade this morning with this. And so I'm always looking for that before we get into our webinars in the mornings is, hey, does this meet the COT report standard as well? It's not required, but I definitely feel, and I will say I probably take bigger trades on stuff that does have the COT report confirmation. So anyway, fun stuff. We'll do that. I'm sure we'll do that again tomorrow. This was, let's see, I'm not sure what day that was, but here's another banker's close right here. We shorted right over there. Dang, part of me is like, should have stayed in that trade from several days ago. But no, I'm sure we did great on that. You can see we made some money on that one too from the 7th. Well, all right. Well, I think that's about it, guys. And just to recap again, when you're using the COT report, try to find break in structure on the hourly or 4-hour timeframes, because that's where you'll find, or daily even, find breaks in those to confirm what you're looking for. That way you'll take better entries rather than just throwing a shot in the dark, hoping that trade makes money. Use the COT report as your bias, right? And then confirm the trade through your technical breaks and things like that. So All right. Well, it's good to chat with you, Lee, and everybody in the recording. Thanks for coming. And we'll see you guys in the morning for the banker's close.